How to identify supply and demand curve. To identify the curve, we need to look at the current price and identify the nearest supply and demand zones in control. The distance between the two proximal lines of supply and demand zones we just identified forms the curve. On the chart, we locate the current price, and we look up and down to identify the closest supply and demand zones in control. Now that we have drew the zones, we see clearly that the price is located near the demand zone. We say that price is low on the curve. When price located low on the curve, we buy only. In the following example, the price is located near the supply zone in control. Here, we only think of selling as the price is high on the curve. When price is located at half the distance between supply and demand zones, we trade in the direction of the prevailing trend. We say that the price is at the equilibrium. As shown on the chart, price is located at half the distance on the curve. This is called the equilibrium, where buyers equals sellers. Usually price keeps moving sideways in this area in the curve until one of the players exceeds the other one. If buyers exceed sellers, we will have an uptrend movement to the upside pushing price higher on the curve. If sellers exceed buyers, we will have a downtrend movement to the downside pushing price lower on the curve. Odd complements to find high probability zones. Now let's discuss the main 4 odd complements that will help us filter our zones and choose only those supply and demand zones that have high probability of success. Odd complement 1. The strength of the move. Good supply and demand zones have a strong move out of the zones. Here we are looking at how the price left the zone. Did the price leave with strong large candles or many small candles? Based on that, we are going to categorize the zones from strongest to weak. Here's an example. Price left the supply zone with strong bearish candles to the downside, and this categorizes the supply zone as strongest one. Look how price left the zone. This zone is weak because price left with small candles. Now look how price retraced back up and went through this supply zone. As a trader, you should avoid trading weak zones because price will ignore it and pass through it. Odd complement 2. Time spent at the zone. The second odd complement that we look at is the time that price spends at zone. Good zones have between 1 to 6 candles in the base. Beyond 6 candles the zone might be weak and therefore resulting in a losing trade. Odd complement 3. Fresh levels. The third odd complement is to check whether the zone is fresh or not. A fresh zone is a zone that has not been tested by price. As price keeps coming back and testing the zone, the probability that this zone will work decreases. After a second retracement to the zone, it is better not to consider it, because there might not be enough demand to push the price higher again. In the first retracement, the price tested the demand zone and moved up. The same happened in the second and third retracements. After the third retracement, price broke below the demand zone as no more demand was found there. Notice that price penetrates deeper inside the demand zone with each retracement. This is a good signal that shows whether the zone is still valid or not. The last odd complement is the reward to risk ratio. We need at least a ratio of 1:2 to consider the zone as valid for trades. In this example we are going to use 4 odd complements in order to categorize the zone that has higher chances to succeed. We have here a drop, base, drop, supply zone. Now we are going to analyze all 4 odd complements. The first is strength of the move. As we see, price left the zone strongly with a clear bearish candle, following by several small bearish candles. Based on this picture we categorize this odd complement as a strong one. Next is the time spent at the zone. The base of this supply contains only 1 candle. As we explained before during the video, this zone is the strongest one. This supply is a fresh zone, and the third odd complement categorized as a strongest one. The risk-reward ratio that this supply offers is 1 to 3. The third odd complement is defined as strongest one again. This supply based on the analysis categorized as a high probability and worthwhile selling at this level.